Alright, what's going on everybody? Like I mentioned before, every Sunday I'm going to be bringing you guys the best trade that I took throughout the week, even if it's a win or maybe even a loss, just to show you guys that losses are completely normal as well. But this week we actually were on fire. We took two trades. One trade ended up giving a 1 to 4 and the other trade a 1 to 3. Alright, so this week was pretty solid in the signal group. So let's get right into it. So as you guys can see, we took this trade right here on Tuesday. Look how precise our entry is. Notice how our entry is to the exact pip. Like price just wicked this area when the session started. And that's where the volume came in from for the next, honestly, for the next few days. And honestly, you can see how the volume came in from here for the next few days. If I just exit this, you guys could see how literally from our entry point, this exact entry that we entered, that's where the volume for the next few days came from. So let's actually break this trade down. Let's replay and go step by step into why we took this trade. So if I break this down to right here, 8:30 in the morning, and I take off everything, this is literally what I'm presented with in the morning when I come to sit down before I trade, right? So I trade New York session from 8:30 to, well, I trade New York session from 9 a.m. to 11 a.m. But I sit down every morning at 8:30 just so I could do my analysis. I sit down by 8:30. That way I have time by 9 o'clock when New York session opens. I already have my chart set up and I'm not like chasing price. I could already watch price peacefully. The first thing I do when I sit down right here, and this is sauce, guys, make sure you guys do this as precise as possible because you're going to see how important this is in this exact breakdown, right? So we're on M5 time frame. The first thing I do is mark my highs and lows of days, right? So if we're trading on Tuesday, the high and low of day is going to be coming from Monday's price. And to do this, it's going to be the highest and lowest point between Frankfurt and New York session, right? So it's going to be this point right here, which is the high of day. We're going to mark this like this. And then we're going to mark the low of day down here, this area right here. And then now we're going to mark the previous high and previous low of day, which is two previous trading days than the one we're trading from. So if we're trading on Tuesday, it's going to be coming from Friday's price, right? So we're going to mark this right here. And just by marking this, you're going to see how precise these areas are. And the reason of marking these is you guys are going to see how they're respected throughout time. And when they're in confluence with area of supply or demand, how precise those areas are. It's like a higher probability area. So this is a previous high of day right here. And then we're going to mark the previous low of day down here. And then now we're going to do a top-down analysis, right? So now I'm going to just do a top-down analysis starting from the daily. And I'm going to work my way down. So check this out, guys. So notice on the daily, how our next target actually on the daily is going to be this area up here, right? This is the next target for price, this daily supply right here. When I say target, I mean as far as higher time frame supplies go, because this area right here that I have right here, if I mark it right here, you can see how price already used this area here to the exact pip. We got a pullback to an area of demand, and then now we're continuing the push to the upside. So the next daily supply is this area here. If we're going to mark daily demands, there's nothing really up until down here, so we'll just mark it for the heck of it. But we're actually going to do a top-down analysis. You're going to see what we could see on the lower time frames, because in reality, there's a lot more that could go on between these points right here. So if we go to H4, we're going to be a little bit more precise, right? H4, H1. So on H4, so the area of demand that's going to get hit first is going to be this area right here, right? On H4. H4 demand. And then notice how we have this nice void to fill, right? So it's not too clear on H1 yet, but when we go to H1, you're going to see the point of the top-down analysis. So look how everything makes more sense right now on H1. First thing we notice is these equal lows right here, right? Equal lows right here, and this area of demand right here. So we have this area of demand on H1. We're going to mark this like this. And then notice how the first few targets for price is, if we don't do the top-down analysis, we'll think this is the first target for price. But in reality, we have this H1 demand here, H4 demand, and daily. So check this out. Now we have our next target for price for the next few days, this H1 demand. And if we do a top-down analysis, now we go down 15. We turn on our session-based indicators. This is what I'm working with for the morning, right? So this is the next target for price down here. And then the actual target that we could use for our session would probably be these lows right here, the previous low of day and low of day. Notice how I'm literally going all the way down to, up from the day, going down from the daily all the way down to the M5 and even the M1. And you're going to see how we get these entries so precise, right? All right, so notice this. Notice how London gives this M5 supply right here. So we mark M5 supply like that. And then notice to the exact pip when I think there was news right here at 8:30. News pulled back to this area of supply created from London, and that's where the volume is coming in from. But when this volume comes in, it creates an area of supply, a new area of supply right here on M5, right here that I'm marking, this previous contrary candle before its push. And then what else does price do? Price on M15 creates an area of supply as well. Notice how that M15 supply right here, I'm not marking it because it's to the exact pip of the previous high of day. So we have a M15, M5 in confluence with the previous high of day and high of day area. And if we go to M1, the M1 supply as well right here. So we have M1, M5, M15, previous high of day supply, all in one in confluence. So this is like a super high probability area to take a sell from. So in the signal group, I sent a sell limit right here at 451, exactly right here. 451 with a 8 pip stop loss. So this was the parameters I sent a sell limit with. And then you're asking yourself, why did I send a sell limit? Why do some areas do I send a sell limit? Some areas I wait for an entry confirmation. This area I don't need to wait for an entry confirmation because we have all these time frames in confluence and confluence with the high of day, previous high of day, and it's pretty much the previous session setting us up. So then I send a sell limit here in the signal group, and you guys could see that price pulls back to this exact area you're gonna see right here. Notice literally to exact area to activate our orders, and that's where the volume comes in from the next few days. So check this out. Look at this. Literally the volume is coming in from our entry point. All right, so we fast forward from here, and notice literally the volume for the next few days is literally coming in from this exact entry point right here. Notice how precise these entries are, guys. That's why I'm telling you, the more precise you are on the lower time frames, the more meticulous you are marking your highs and lows, your supplies, everything, the more precise your entries are going to be. Like, no one could argue that our entry point is where the volume came in from for the next few days. Look at that, like to the exact wick. All right, so yeah, you guys can see how precise these entries are. So I hope you guys found some use of this video. Make sure to leave a like, comment, subscribe. I'll see you guys in the next one. Peace.